Do you need life insurance in retirement? That is a common question that we get, and it comes from folks that don't have it and always heard that they should, and people that do have it, but then they're wondering if they still need it in retirement. So today we're going to talk about the purpose of life insurance, cases of why you would need it in retirement, and then if you don't need it, options of what you can do with your policies.
Welcome to the Your Life, Your Money podcast with Scott Searens, teaching you how to thrive in life, wealth, and retirement.
Welcome to the Retirement Show, all about your life, your money, and your taxes. I'm your host, Scott Searens, and my goal is to help you thrive in life, wealth, and retirement. And today we're going to talk about a common question we receive when sitting down with new prospective clients. That question is, do I need life insurance in retirement? A lot of times people are coming here with their existing policies. Sometimes they don't have policies at all, but it's a question on their minds because, well, as they went through life, there's a lot of commercials and advertisements and things out there explaining how you need life insurance. And so I understand it's a common question, wondering if you still need life insurance in your retirement. Now, before we get into our main topic, I wanted to make you aware of another free guide that we've created for you to utilize. We recognize that a lot of people listening to our show are preparing for retirement, are not yet collecting Social Security and wondering when to start collecting it. So we have a free guide all about the who, what, when, where, and how of Social Security. It's going to discuss the different decisions around Social Security. It's going to provide actionable advice about the timing of claiming your benefits, discussing ways to help supplement your Social Security income, and hopefully help you optimize, get the most from your benefit, and maybe optimize your benefit by hundreds or thousands of dollars. You can get this free guide at lifemoneyshow.com/Social Security. Again, that's lifemoneyshow.com/Social Security, or you can click on the show notes and we'll include a link there as well. So back to our main topic here. Maybe you have some life insurance policies. Maybe you have some old life insurance policies that you've just been hanging on to, or you don't have life insurance, but you heard that people should always have it, and you're wondering for yourself, do you need life insurance in retirement? And I get this question a lot from people just like you. And so today, that's what we're going to talk about. First, I want to talk about the purpose of life insurance. We're going to talk about cases of why you might need it in retirement. And then if you have it and you don't need it, then what are the different possibilities to do with those life insurance policies that you have? So let's just kind of start with the basics. We're going to grow from there, talk about those case studies, and then whether or not you have it, we're going to talk about if you have policies and you're like, wait a second, I don't need these policies anymore. We're going to talk about the options for those old policies. Okay, so here we go, kicking off. First off, what is life insurance? Well, you pay a premium to insure someone's life. And then if and when they pass away, the insurance company is going to pay what they call a death benefit. It's a lump sum amount of money to the beneficiary. Now, typically that death benefit is paid out to the beneficiary tax-free. There are no taxes on those payments from life insurance. Typically, again, always go back, review your specific policies in regards to that. But typically those death benefits, those lump sum amounts, are paid tax-free to the beneficiary. Now, I think we all have probably understood what life insurance is over time, but it's important to understand not just what it is, but what is the purpose of life insurance. And I find a lot of times that people can lose track of the purpose. And so, first off, the purpose of life insurance. If you were to pass away, would your dependents be able to maintain their lifestyle and survive on all of the other means that you have? So would your dependents, this could be your spouse, or maybe you still have some dependent children, would your dependents, those people, be able to maintain and survive on all other means that you have, meaning the income that would still be coming in, maybe what you have in your savings account, what you have in your retirement savings accounts, all of these other means. And if not, if they aren't able to maintain and survive on all other means, then you need to create that means for them. And a typical way to do that is through life insurance. So a good analogy would be, let's just think about home insurance. You might have home insurance on your current home or a rental home or whatever you have, or you've got rental insurance, right? But why do you have home insurance? Well, and what are you insuring? Well, when you have home insurance, you're insuring your home. If something happens to your home and it can no longer provide you shelter, then the insurance company pays out so you can get shelter. So same thing here. The insurance company pays out that life insurance death benefit so your dependents can continue to maintain their lifestyle. They can continue to pay for the mortgage. They can continue to pay off any debts. But I find sometimes the purpose of life insurance, the actual purpose of life insurance, what we just covered there, gets lost, and instead the focus becomes on the premiums that you've paid for years. It becomes more of an emotional focus to all of this money that you've paid into these life insurance policies versus what is the actual purpose of the life insurance policy. Sometimes I even see that it becomes such a tie, right? When you actually look at the dollar amount of the death benefit that you currently have, would that even help support or do anything if something were to happen to you? So one of the last parts here, and when I'm talking about purpose, is I just want you to focus on the purpose, not on the fact that you've paid these premiums for years. So with that, how do you know if you're going to need life insurance in retirement? And we're going to start from a very high level, then go into some, I'll call it hypothetical cases to help you understand whether or not you continue to need life insurance in retirement or you need to go get life insurance for your retirement. So how do you know if you need life insurance in retirement? Well, a lot of times if you're a couple, you've got two people in your relationship, that means you have two Social Securities coming in. You might have a pension coming in. And if one person were to pass away, you're going to lose one of those Social Securities. You're going to keep the higher of the two Social Securities. And again, I'm just going to kind of plug that new download, lifemoneyshow.com/Social Security. As we're talking through this, you'll see that Social Security is going to play a huge role in whether or not you might need life insurance in your retirement. So go and download that so that way it can help you optimize your benefits. Now, the other thing here is, do you have a pension? And then again, if one person were to pass away, are there spousal benefits on that pension? Will the spouse continue to get 100% of that pension amount? Will they get 50%? Or will they get 0%, meaning does that pension totally go away? So that's kind of a high level, right? If you're a couple. Now, if you're a single, the cases become less and less of why you might need life insurance in retirement, because if you're a single, do you have any dependents? Do you have anybody that relies on you that will need this death benefit to maintain and survive if something were to happen to you? That's a question that you need to ask yourself. So with that, let's talk about some cases for needing life insurance in retirement. And the primary case for needing life insurance in retirement is if you haven't saved enough and one Social Security won't be enough for the remaining spouse to be able to maintain and survive. Let me just give you an example here. Let's say we have a couple. They have two Social Securities coming in. Just to make the numbers nice and easy, let's just say their Social Securities are $2,000 each. So they've got $4,000 a month coming in, or $48,000 a year. Well, for this couple to maintain, so let's just round, right? It's about $50,000 a year coming in. Well, to maintain and live their lifestyle, they actually need $75,000 a year. So what are they doing? They've got money saved up, and they're withdrawing $25,000 a year from their retirement savings. Now, one of the two people pass away. As I mentioned earlier, one of the two Social Securities is going to go away. So their $48,000 a year just got cut in half. And it goes down to $24,000 a year of income that remaining spouse has coming in. And if they want to maintain to the exact same lifestyle, and I know we could probably go into the weeds here and say, well, the remaining spouse, they might not have as many expenses for one person versus two people. But again, just to kind of give you a high level today, let's just say they want to maintain that exact same lifestyle. Well, instead of withdrawing $25,000 a year, they now have to withdraw $50,000 a year from their retirement savings just to continue to maintain that approximate $75,000 a year lifestyle income that they need. And they'd probably need more than that because of the widow's tax. What that is when you are a single versus a couple and you have the exact same income coming in, most likely as a single, you'll be at a higher tax bracket than a couple would. So when I say most likely they need more than that, what I'm saying is that because they're in a higher tax bracket, they're going to have to go to withdraw more just to get to that same $75,000 level. But back to the main focus here. As a couple, they only needed to withdraw $25,000 a year to maintain their lifestyle. Now, as a single, that remaining spouse is going to have to withdraw $50,000 a year to maintain that similar lifestyle. And the question then becomes, will your retirement savings support that $50,000 a year withdrawal? Will it support that big increase in the amount of funds that you need to take out and still be able to last? That's what supporting means. Will you be able to take out that much money and be able to make your retirement savings last? If the answer is yes, well then great. You shouldn't need any life insurance. If the answer is no, and as I had mentioned from the beginning, you haven't saved enough and one Social Security won't cover everything. If the answer is no, that could be a case for when you might need life insurance in retirement. If one spouse were to pass away, the remaining retirement savings won't be enough for the remaining spouse to live their lifestyle on. So that could be a case. Case number 2, and I'm going to go through the cases first, then we're going to talk about how much you could potentially need, how long. And again, maybe I go through these cases, you decide, hey, wait a second, I don't need my life insurance policies that I've kept around for years and years and years. What do I do with them? We're going to end with that. So case number 2, why you might need life insurance in retirement. Let's just say you have a pension and there's no spousal benefits, or maybe it's a reduced spousal benefit. Share a quick story with you of a couple that we work with. One of the spouses actually has a really nice pension, 6-figure pension coming in each and every year. However, if that spouse were to pass away, that 6-figure pension would get cut in half. And that is a really big cut in regards to this couple's retirement income. And based on what they've saved up, they wouldn't be able to fully fill in what the cut would be from that pension. And the remaining spouse has said, hey, I want to maintain a similar lifestyle. So this is very similar to the Social Security example, except for it's just a pension, right? So that pension gets cut in half. Let's just say instead of $100,000, now the remaining spouse has $50,000 coming in, and they recognize that they need to replace that $50,000. And the way to replace that $50,000 if that one spouse were to pass away would be to utilize life insurance, having a lump sum benefit that then comes in for that remaining spouse to be able to make those $50,000 withdrawals from. All right. So case number 1, you haven't saved enough. Social Security is not going to be enough to cut it. Case number 2 is you have a pension where if that person were to pass away, there are no spousal benefits or there's going to be a reduced benefit. Case number 3 is maybe you just want this, and I find a lot of people talk about this, is maybe you just want a death benefit for burial cost. But this one, I'm really going to put some pushback on in regards to this. Is this really needed? Because if your goal is not to run out of money, will there be something there for your children to then pay for your burial costs, or your beneficiaries to be paid for your burial costs? Actually had one client, and what they just decided to do was put some money aside in a high yielding savings account and said, here we go. There's our burial costs. We've already put the money aside. No need for us to go and pay these annual premiums when it comes to life insurance. And that's just money that they consider that they'll kind of never touch through the retirement. It's already there, and it's there for their burial costs. So case number 3, death benefit for burial costs is why you could potentially need life insurance in retirement. But again, that's one I'm going to give you a little bit of pushback on to say, hey, is this really needed? Or should you just set aside some money? Because you also have to understand, like life insurance, it's going to take some time to submit the paperwork for the insurance company to make the payouts. And so that money isn't actually just going to be there right away for them to pay for those burial costs, for them to pay for those funeral costs. So there's some alternatives that I would, highly recommend just kind of thinking about, looking at, or considering in regards to, do you need life insurance for that overall purpose? So maybe as you've listened to this, you've decided, yeah, I actually need life insurance in retirement. And one of the things that we do with our clients is we help them put together their income plan. So you want to kind of think about that first. Put together your investment plan, marry that up with your income plan, and then test that income plan to see what happens when one spouse passes away. Test it to see, will the other spouse be able to maintain their retirement income? Will they have to make certain reductions? Are they okay making those reductions? Or do you need to add life insurance to your retirement? So let's just say you do need to add it. How much do you need to add? Well, it'd be enough to produce the income that needs to be replaced. So let's go back to our first example of haven't saved enough and one Social Security won't be enough. We said that couple was first off they needed $75,000 a year coming in. They're making $25,000 a year withdrawals from their retirement savings. One spouse passed away, so then those $25,000 a year with withdrawals went to $50,000 a year withdrawal. So they had an increase, right, of $25,000 a year that the remaining spouse would need if one person were to pass away. So one way to kind of look at this is there's this age-old rule called the 4% rule. What that is that you can take out 4% based on how you invest your funds, that you could potentially take out 4% each and every year and make those funds last. So you could kind of use the 4% rule backwards. You take the $25,000 that you need each and every year, divide it by 0.04. That's going to say, hey, this couple could potentially need a death benefit of $625,000 in their as life insurance throughout their retirement. Now, that's the other thing, right? How much do you need, but how long do you need it? Because one of the things that you have to consider is, right up front, if the spouse were to pass away, they could need that $625,000. But then as time goes on, as let's just say this couple's in their 60s, once they get into their 70s, that risk reduces. Once they get into their 80s, that risk reduces even more because this $625,000, that could also reduce, right? They might not need as much because it's all based on longevity of then how long the second spouse will need. So it's kind of a very flexible thing that you have to think through here and put together, because while you might need that death benefit up front, the risk goes down over time, which also might reduce how much life insurance that you need over time. So kind of, for instance, for that story that I gave you with the pension reduction, what we did for them is we actually went a little bit lower than what you'd consider with the 4% rule, and actually not all the way through retirement. We just did it through age, I think in that case it was like through age 85 or something like that, because what we recognize is by age 85 and how much they would be spending each and every month, that risk, if that first spouse were to pass away, would kind of fade away. And so those are the things we could probably do a whole episode in regards to, like how much, how long, And there'd be cases for just needing the full amount throughout the entire retirement. There'd be cases for why you could just take a reduced amount. There'd be cases for why you might need it for only 10 years or 15 years. And so with that, what I would really say is sit down, talk to a qualified financial professional, somebody that's going to help you understand your specific situation. And then what we did for this couple and what somebody could be able to do for you, or we can do for you, is run through different examples and different scenarios saying, okay, if we use this amount and somebody was to pass away at age 70, here's what the income looks like. If we were to do this amount, somebody were to pass away at age 75, here's what the income looks like. So that way you can look at multiple scenarios and then make an informed decision of how much you need and how long you want to have that life insurance for. All right, so that's if you do need life insurance in retirement. Now, maybe you've gone through all of my stories here and you're really thinking to yourself, okay, wait a second. Sounds like I don't need life insurance in retirement. What do I do now? Well, first off, if you don't have any life insurance, then you don't need any. So don't worry about getting any. No matter what you see on the TV and the advertisements that you see on your phone, just don't worry about it. If you don't need it, there's no sense in getting it and paying the premiums for something that you don't need. Now, maybe you already have life insurance. Maybe you have old policies that you've been keeping around. And now you needed to make these decisions because you've maybe made the first decision. Sounds like you don't need it. Now you need to decide whether or not to keep your old policies. And let me just give you some scenarios of what you can potentially do with them. First off, understand the policy that you have. Make sure that you're making some phone calls to fully understand the policy you have. What we'd like to do with our clients is just do a conference call with the life insurance company. Make sure that we fully understand that life insurance policy. Is it paid up? How much longer will they have to pay premiums for? Is there chances that the premiums could go up in the future or not? Is the cash value currently being used to pay for the premiums? If so, how much? And how does that change over time? Really important to fully understand your life insurance policy first. Once you understand it, then go through different scenarios like this. First off, if it's paid up, meaning you'll never, ever, ever have to pay a premium again on that life insurance policy, well, then in that case, you just might want to keep it. So for instance, give you a quick story of a couple. They had some life insurance policies. They went through this scenario. They determined, wait a second, we no longer need life insurance. We've saved up enough to be able to support us, whether one person is living or two people are living. And in their case, after doing the reviews on their life insurance policies, they had some that they decided to surrender, and I'll talk about that in a second. But they had some that they recognized as they talked to the companies that they were paid up. The company said, hey, the life insurance is paid up. You're never going to have to pay a premium again, and you get to keep this life insurance policy. Well, and in that case, it just made sense for them to actually keep the policy because they don't have to pay a premium again. If one person were to pass away, the beneficiary would get the death benefit. That's what paid up means when it comes to your policy. Now, maybe your policy has cash value built up in it. And if it does, what are some options if you no longer need this policy? Well, first off, let's just give you one very clear reminder. When you're looking at an insurance policy statement and it shows that there's cash value built up, here's the thing. You don't get both the cash value and the death benefit. Make that really clear. You don't get both. You can use the cash value while you're alive, or if you were to pass away, somebody else gets the death benefit. So for example, let's just say you have a $100,000 death benefit and you see that there's $25,000 in cash value. If you pass away, the beneficiary gets the $100,000 death benefit. If you surrender it, you get the $25,000 cash value. You don't get both. And I think a lot of times people are looking at their statements thinking, wow, look at all of this that I have built up. I don't want to just see it disappear. and they feel like their beneficiary would get both, but that's not actually the case. So one of the things that you can do is you can stop paying the premiums. And again, all of this, talk to the policy, make sure that you're able to do these things. But one of the things that you can do is potentially stop paying the premiums and then just let the cash value cover the premiums until the cash value runs out, at which point in time then you'll have to decide, do you want to continue to pay the premiums or just surrender the policy? So that's a way to just stop paying the premiums, save yourself some money, and let the policy itself kind of take itself out until that cash value runs out, at which point in time, if you don't then continue to pay the premiums, the policy would be what they call is surrendered, or meaning expired, no longer existing, etc. The other thing that you could do is that you could surrender the policy and take the cash value. Now, as I say this, I want you to be really aware of one thing. Just be aware of taxes. But I don't want you to taxes to kind of scare you away from this either. But if your policy has cash value and you're going to surrender it to take the cash value, one of the things that you want to ask the insurance company up front, and they should be able to provide this to you, is what is the cost basis of my life insurance policy? The cost basis is the money that you've paid in that you won't get taxed on, and then anything above that you would pay tax on. But again, policy specific, always talk to your life insurance, talk to the life insurance company to understand the taxes that you might have to pay when it comes to your policy. So few quick stories on this. One story is that I had a client, after going through this process that we've talked about today, she was actually a single and she had life insurance. And so we talked about it and she says, wait a second, you're right, Scott, I don't have any dependents or people that are dependent on me that I need to keep this life insurance around. So she decided that she no longer needed her policy. At the same time, she actually needed a new car. So it worked out for her. She took the cash value, surrendered that policy, took the cash value, meaning they paid that out to her, and then she utilized that to help her at that point in time and her overall plan pay for the new car. Another couple, in regards to their quick story, is they had cash value built up, and after going through the same process, determining that they didn't have, neither one of them would be dependent on this life insurance policy to maintain their lifestyle, they actually had cash value built up that they needed that cash value. It actually made more sense for them to take the cash value and invest it for their retirement savings. They had so much built up that the cash value was almost similar to the death benefit amount, and this was more as retirement savings for them to shift it from life insurance to retirement savings to help them pull income through their retirement. So hopefully that's a few things, as you look at your policy, maybe it's paid up, maybe there's cash value, maybe there's no cash value. Maybe you just have a term policy, or you have a whole life policy or a universal policy. Maybe you have a term policy. Of course, there's no cash value in the term, but maybe you have whole life or universal life where there's also no cash value built up. At that point in time, then it's just up to you to determine whether or not you want to keep the policy, or if you've decided that you don't need it, again, do you then just surrender the policy, meaning talking to the company, telling them that you're no longer going to pay the premiums anymore and that you just want to surrender the policy because it's no longer needed. And this last one brings up a very key subject that I want to talk to you about, which is emotion versus logic. Emotion versus logic. And I find sometimes people can become so emotionally tied to these life insurance policies. As I mentioned at the beginning of the show, you've paid premiums in for years and years and years, and you just become emotionally tied to this potential death benefit that's going to be there if something were to happen to either one of you. But do you logically need it? So even if there's no cash value built up, does it still make sense for you to pay the premiums for the life insurance policy that you have? Another quick story, meeting with a couple here, as they come to me to discuss their retirement, they had probably over a handful of different life insurance policies. And as we added everything up, they had over $1,000 in premiums that they were paying each and every month from a life insurance standpoint. And as we walked through their retirement scenario, and we went through different cases, if people were to pass away at different ages, of how much income that there would be coming in, how much income there would be left. And as we walked through all of that, they recognized they didn't need life insurance anymore. And they're paying $1,000 a month in premiums. So they had to really take a hard look at, does it make sense to continue to pay $1,000 a month in premiums throughout our retirement for something that we don't need? Or could this help save us cost? And then that's $1,000 a month that we don't need to go to our retirement savings and take that money out. And instead, we can utilize that money on things that we want to do for our retirement. And their focus really became on the latter, utilizing that money on things that they wanted to do for their retirement. So that's the other part, emotion versus logic. We can become sometimes so emotionally tied to things that we've done for years and years and years and years, and it's hard to see it go away. But do you logically need life insurance in your retirement? And hopefully today's episode gave you kind of that way to look at your specific situation and help make that determination whether or not it makes sense for you. Hey, again, knowing that a lot of you are listening and preparing for retirement, maybe not yet collecting Social Security, we have a new free guide out there. Again, you can go to lifemoneyshow.com/Social Security. A new free guide out there that discusses all of the different decisions around Social Security. It's going to provide you actionable advice about the timing of claiming your benefits to hopefully help you optimize your benefit by hundreds or thousands of dollars. You can get it at lifemoneyshow.com/Social Security. I hope you enjoyed today's show. If so, subscribe on your favorite podcast player. And I look forward to our next conversation to helping you enjoy life today and being financially confident about your retirement.
Insurance products are offered through the insurance business Sierens Financial Management, Inc. Sierens Financial Group, Inc. is an investment advisory practice that offers products and services through AE Wealth Management, LLC, AEWM, a registered investment advisor. AEWM does not offer insurance products. The insurance products offered by Sierens Financial Management, Inc. are not subject to investment advisor requirements. AEWM and Sierens Financial Group, Inc. are not affiliated companies. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims paying abilities of the issuing carrier. This podcast is intended for informational purposes only. It is not intended to be used as a sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual situation. Please remember that converting an employer plan account to a Roth IRA is a taxable event. Increased taxable income from the Roth IRA conversion may have several consequences, including, but not limited to, a need for additional tax withholding or estimated tax payments, the loss of certain tax deductions and credits, and higher taxes on Social Security benefits and higher Medicare premiums. Be sure to consult with a qualified tax advisor before making any decisions regarding your IRA. Sierens Financial Group, Inc. is not permitted to offer, and no statement made during the show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Sierens Financial Group, Inc.